Right, the main recording is going. All right, we are live. All right, and so again, this is a public webinar. Some of you guys may have never seen my work. Found it on Twitter. All good. What this webinar is a weekly webinar for those that subscribe to the crypto service on ElliottWaveTrader or on Seeking Alpha Crypto Waves. Both are hosted by Jason and I. I was the founding analyst by Avi. Jason has joined. Has it been a year yet? I think it's been a little bit more than a year now that he's joined me on the crypto side. Although he has a lot going on in the Elliott Wave family. So these webinars usually only have me generally. What the basics of the analysis is using Elliott Wave theory. The one thing I want to say very quickly about it, and it's a very, very old technical analysis theory. It is, in my view, it has some predictive power, but in my view, that is really not the best use for it. The best use for it is figuring out risk to reward. I mean, trading is all about, at least, for most people, trading is less about chasing a win rate than chasing skew. What is skew? Skew is basically making sure that there is a big difference in the winning trades versus the losing trades. If you do that consistently, you will become a profitable trader. If you do not do that consistently, you will not, unless your win rate is really, really high. And if you have a really high skew, you really don't need to have a high win rate. And so that means that a lot of the trades don't work. That's fine. Again, I remind everyone that if you don't use stops, you will not be successful in trading, and you definitely will not be successful inside the cryptocurrency service that we host. So because this is not crystal balling, as I say, I've turned it into a verb now. Again, to quote Dalio, if you trade using, this is Ray Dalio, he didn't attribute it himself, but if you are looking for a crystal ball, you will eat ground glass. It's a great quote. And so we're identifying pivots in the market using wave analysis, which states that trends form in 5 waves and corrections form in 3. There's a lot more to it. There's a lot more rules, et cetera, but I'm giving you the quick view of it. And so nothing here I'm doing is meant to be prediction per se, although sometimes it seems to have predictive power. I'm less interested in that than the risk reward. Just some quick housekeeping. The video here is for subscribers only, although I also share it with the ElliottWaveTrader family, but it is not going out in public. That's just something I reserve for paid subscribers out of respect for them patronizing so nicely and kindly, and obviously they're getting benefit if they continue to do that. And some people have been with the service a very long time now, which has gone on. It's been active since 2017, so we're almost 5 years in the making here. 5-year anniversary coming up in August, actually. And then requests the requests have been put in already by paid subscribers on threads that I put out on Seeking Alpha as well as ElliottWaveTrader. I'm not going to take any more in the question box. Take lots of questions. The only thing I would say about that are those, if you're not here, if you're here already, you're punctual. But I don't go fully back on charts that I've reviewed. Some people say, "What's your Bitcoin take?" After we're half an hour ago, I went through Bitcoin, or an hour ago, or whatever. I'm not going back. But I will take questions on those charts, and we'll hit quick questions. So I'm asking for concise questions, not what's your view of this or that when we get to the Q&A, because I'm not going to go back on the charts. Punctuality is super important. Listening is super important. And I will say again, if you're interested in the video, we do take free trials in ElliottWaveTrader. You not only get crypto, but you get the whole darn site for 2 weeks. And we don't take your credit card, so you don't have to worry about canceling. So if you're interested in, that's all the marketing you get from me. If you're interested in the service, check it out. And that is a way to get the video. Again, no one's going to call you on coming in for 2 weeks just to get a couple videos and then leaving. That's not a problem. And we totally understand that the service is not for everyone. Not everyone wants to be a trader. Some people just want to invest, although I think it's great for investors too. It's just you don't need the intraday stuff that we do if you are not interested in trading. The other thing, so again, yeah, that was all to say, no requests in the question box. Video is going to paid subscribers. Lastly, a couple things. One, next week's webinar for subscribers is going to be on Friday after the stock market close. A friend of mine, his wife is holding a surprise 50th birthday party for him in San Francisco. I'm gonna head down midday Saturday, so it's gonna press the webinar a little too much. So I'm gonna head down to San Francisco, fly back the next day. So it won't affect other schedule for the service, but it will affect the webinar. So I'll hold it after the stock market close. And then lastly, after we go through all the charts today, there were lots of questions around the core algos. For those who never heard what the heck is a core algo, that is 2 algos that we use in the service for swing trading. It's a quantitative approach to kind of layer on top of ElliottWaveTrader, Elliott Wave analysis. So there's some questions about that. We've got 2 new ones updates to the old core algos are called Core Algo 2 for Ether and Bitcoin. So I'm going to go over how to use those a little bit because the questions it seems like people haven't seen the post on it. I couldn't find the original post on them, but I want to go through that so you guys are really clear on it. I know why the questions are coming up because we just had a very big profitable signal, right? I mean, now people, oh wait, maybe I should use this, right? It got chopped out a bit for a while, but now it's got a big profitable signal. It's not yet wiping out all of the previous losses when it was first released. But that's okay. I mean, it's almost getting there. It's almost wiped out all of the losses from its startup, which algo starting up and having a bad run is really not unnormal. But anyway, we'll talk about using that. I have certainly used it since I released it. I put my own capital at work in it, and it's been pretty darn good, even with the chop. Not to mention the Magic Bus algo, which has just killed it in the last couple of weeks. All right, that's another algo inside the service. All right, so we'll go through that at the end, but if you're interested in that and just don't want to hang around, I totally get it and get the video. And if you come in from Twitter or not, it's not terribly important at all. All right, so let's talk about Bitcoin. Let's jump in. Let's see if anybody has anything else to say. What's with the background music? Background music is not me. Does anyone else hearing background music? I don't have any music on. Strange. Anyone else? No, yeah, no, only one person is hearing background music. No music. All right, so someone else, you got background music going on your side, because I definitely am not playing. All right, that would be fun though. I kind of want to talk to music. Maybe I'd rap a little bit. No, I'm just kidding. But anyway, let's go on. All right, so Bitcoin, it's funny. This is my old chart. I don't trust it, but it's funny, it hasn't died yet. I mean, we've had a small breach of support here at 16K, leaving 125 open. There's multiple reasons, and we'll go through what my primary chart is. Basically, it's possible that we did have an ending diagonal for the C wave, and it did end here, just a little bit lower than support, so it's possible. But we don't have 5 waves off of that, and we don't have 5 waves over resistance for the alternate count, well, now primary count. So it's possible this ends up living, for sure. But the parameters, we'll get clear about the parameters for this to live in the next chart. It's pretty clear that just at a very, just to give you the bottom line very quickly, it's possible this market's bottomed. It's totally possible. And certainly we've been trading, at least in the service, been trading on the long side, right? But in terms of whether this is a lasting bottom or not, it really isn't clear yet in terms from an Elliott Wave perspective. And the one thing I want to remind everyone is, look, I mean, we don't have to catch this. We can wait for confirmation for those that have very, I would say, jittery feet about getting into the water. You can wait for this wave 2 to, wait for the wave 1 to properly form, wait for wave 2. Of course, I trade shorter term too, and I've been long. There's been no reason to be short. Now I'm going to be watching, and I'm more cautious in this area because we're reaching that area where we're going to either start to see confirmation of whether this market has bottomed or not. And so from an Elliott Wave perspective, at least. And so to me, it's a waiting game, but we could take some profits while we have it. I'm de-risking a little bit here because I think the main move off of the low has been made. And I can sense everyone's FOMO, hey Ryan, this ain't a B wave. Hey Ryan, this is a bottom and all of that. Again, just because I don't think, to me, what I think doesn't matter, right? It doesn't matter at all. The market doesn't care, and neither should you care. What I'm talking about is whether we have a low risk setup or a high risk setup. Right now, the risk is increased for longs if they're, again, only if they're levered. I mean, if you're like, I have a big part of my portfolio, which is that slow accumulation. As you guys know, I've been accumulating down here. Like, I don't care about that. But in terms of, I was trading the futures, I had a BIDO call spread on the option side in my brokerage account. All of that have taken off on Friday because the risk is increased up here. So let's see how it works through this area to see if we get some confirmation of a bottom. The other alternative, which again is my primary, is that this will top in a wave 4. It's just a very large wave 4 now, and this is the case until we have a 5 waves over 27 or 5 waves into the C wave, and then hold back into a 2 and break out over it. And so that would basically save that previous count. And so we'll go into that from a small term perspective. So zooming in on that same count, let me get in there. All right, so it is still, I know some of you guys don't believe it, but I still maintain that this is a B wave simply because it's 3 waves. If we do get 5 waves out of this, then to me it's an extension on this 3. The why do I say that? Well, look how long the 1-2 is, and this is a diagonal, most likely because it's 3 waves. Well, that would mean that the 4 should be relatively deep, and we just haven't seen it. Okay, so this to me is 3 waves. This, if it topped here and went below support, it would be the Y wave top, and we wouldn't even have the C wave in the wave 4. So there's a lot to be done here, and right now we still have the last bit of support for a 4 at 18,650. Again, this is a diagonal, so it can pierce that, and frequently does, but it should still hold around that area. I'll draw trend lines. Diagonals is the only time I use a trend line, or that and triangles. Only time I ever use trend lines, and I'll draw that if it starts to go deep, because sometimes they help as well, but it's still 18,650. Again, a lot of people don't believe this B wave. One thing, again, high B waves are very common in crypto. I talked about a certain member last week who just wanted to trade every single darn move, and eventually I have good information that he went broke. One thing he said to me one time is like, always go long the B waves because the B waves always end up not being B waves. Well, again, like, this is a guy that I have the information that he's gone broke and quit trading. Again, you don't want to be chasing this move. There's no reason to. As you know, on Friday, I took off a little bit of risk. I did not go short. I did not go zero. Did not go flat. I just simply cut a little bit of risk. Just especially the more riskier positions like the futures trade, as well as the call spread. But by and large, all of that Bitcoin accumulated, and I'm not doing anything with it. Same with the Ether side. So it's just, to me, this is a good spot to de-risk. It's a very bad place to chase. But as we get pullbacks into this area, sizing up, as long as you manage that position well and the size right, it's fine to trade for this 5, or you may choose to wait for the 2. And so what is the red 2? Again, the red 2 would be the confirmation that we have a bottom. So we form 5 waves. Again, it's old Elliott wave speak for the beginning of a trend, and then 3 waves back in 2. We'll mark support for this 2, but it's going to be somewhere around 18 roughly. And if it holds that, then and breaks through this resistance here, 2060, then by all means, I can tell the bottom is in. There are other bearish counts where we rally in a B wave and drop and all of that stuff. I won't even worry about that, because I wouldn't worry about that until we see symmetry versus an impulse. We'll talk about that when we get there. There's so many things, but to me, this wave 2 is the most aggressive setup that we'll get in the next couple months. It might take that long for this to work out. Maybe it's shorter, doesn't matter. But when we get, again, the timing to me is not nearly as important as price. And so as we get into the 2, provided it holds, that's a great place to make a real good shot at the bottom again. So to me, looking at this, there's no reason for FOMO. Now, it's possible, we push straight up directly through this 27,600. That certainly happens. I don't see a reason for it right now. Just because it's been running hard doesn't mean that it continues to and doesn't get tired. There's lots of evidence out there that people are already levering up. Like, people are already calling the bottom, already levering up. And that may not mean that we go to new lows. That may simply mean they get blown out and we just drop a little bit into this 4, or we drop into that 2, whatever. So to me, it's just not a good area to chase and get FOMO. But you know, I would say if you don't have a position, then get a position. Just don't make it a levered up position, right? I mean, most people shouldn't trade with leverage. So, you know, I wouldn't want to be without a position right now, but I also don't see a reason to chase this market with aggressive position. We really haven't gone anywhere. We really haven't gone anywhere. It just, if you're staring at 5-minute charts and you see these big green candles that you haven't seen in a long time, it's very easy to get worked up. But if you zoom out on daily chart, like, I mean, man, the trend is still down. You know, it hasn't blown out. You haven't even taken out this high here, and taking out that high doesn't guarantee that the bottom is bottomed either until it starts putting higher lows afterwards. Again, we need a series of higher highs and higher lows to say the trend has changed. So there really is nothing here to get overly excited about. But you know, this kind of move is part of a bottoming process, right? Whether it goes to new lows or not. I mean, so this market still has life, right? Everyone is talking about, you know, it's funny, right? We're only higher since the FTX blowout. You know, everyone talked about the contagion. Well, the contagion kind of, I mean, I guess Bitcoin just forgot about the contagion, right? But that's very typical when sentiment is so darn bearish that you know, market tends to blow out the bears. And the same thing on the long side. And right now, I'd say if people are swinging a little bit sentiment-wise to the long side, we'll just see if they get blown out or whether they are correct. I don't care. You know, I bought my Bitcoin, you know, right? And I may just made profit off of the low. And if you didn't, don't feel bad. You don't have to trade every move. You know, I've had plenty of moves I traded down, you know, up and down on the way down, and you know, didn't make money on. You know, you don't feel bad about not catching this move because there is going to be more pullbacks to come. I mean, there really is no reason to be stressed about that. All right, so that's enough I have to say about Bitcoin. I mean, again, the bottom is not clearly in, but it's possible the bottom is in, but it's not clearly confirmed that it is. It's the best way of putting it. And then, you know, I need to see it work through a few more pivots before we can say that. And there's been a lot of morphing down here for sure. I mean, it's been difficult action down here, but you know, that's the nature of corrective structures. I mean, it's, you know, rallied in 3 waves, dropped in 3 waves, and so far it's 3 waves off of the low, but maybe it works on a 5. Simple as that. And those are the types of structures that are, you know, 3-wave moves are squirrely. They're just squirrely, and they morph and they change. And you know, my analysis changed quite a bit as long as the market's moving in 3 waves. But once it starts to putting in an impulse, the analysis gets quite static. And regardless, we have our pivots. I mean, the pivots are right now crystal clear. Let's see. So let's go to Ether real quick. Ether is one of the weirdest charts right now from even a long-term perspective. So I'm very, very cautious on it. That said, what's really good about it is that it has continued to hold that low last year that Bitcoin has not been able to. If Bitcoin is going to get stopped by 27.6, then I've got this red count. We should see 5 waves in here, which we'll zero in on, but it's the same thing. So if this is not a reliable 5-wave structure, it's a diagonal at best, but if it does hold a 1, 2, and then a little 5 waves, 1, 2, then that is a very good start to the third, and that should get us up to 10.5. But I'm not convinced of it yet, until we work through a bunch of pivots here. But it's at least, again, more positive than Bitcoin because we have this higher low. Let me zoom in. You can see very similar structure. High B wave here so far might morph into an extension on the third. This is not nearly as big as Bitcoin. Support is still 1370, and it's the same deal. You notice that I have this one in black. You know, where this 2 in red is 2 in Bitcoin is red, and it's very simply because we have this higher low. It gives it a little bit more probability that this is a secondary higher low in that second of the third. So if, you know, if this move up into here can finish in 5 waves because it's an A, B, C, and then we blow down into 300, or, you know, it's very simple, finishes, holds a 4, gets the 5, and then holds a 2, then boom. Pretty simple. It's a bit amazing here, but from trading, it's very simple. You know, to me, I stay on the long side, you know, and not get into the short side until we either break this impulsively, 5 waves, or break this impulsively. Other than that, I'm staying on the long side. It's just different degrees of long. So, you know, I scaled out a little bit less so in Ether, but a little bit on Friday. And then if it comes back down, if it's clear that this becomes third wave, then this support will adjust, but it will come back down, and then buy a little bit more, scale out, scale in, and then we get, there's more scaling out to do up here. But once we hold this, it's on. I mean, the game is on. So that's when getting aggressive makes a lot of sense. Again, when I say aggressive, it's not so aggressive that you get blown out. You have to measure your position. You got to measure your leverage. You got to do all the trader math that everyone must do if they want to trade successfully. What's your real risk? Are you comfortable with that risk? If it does this or that, where do you blow out? And you got to avoid those blowouts. We spent a lot of time on that in past webinars. And not gonna belabor that here, but for those that have been subscribers a long time, you know the game. And some of you guys have not managed your positions well on the way down. Okay, it's 2023, a new day, possibly a new cycle. Do better. I mean, you don't have to be perfect. I get better every cycle. I'm still learning myself, but some of you guys really need to step up your risk management game for sure. And I think you guys know who you are. I don't even really know who you are, but hopefully you're being self-honest or self-aware, honest to yourself. All right, so that is Ether. Hopefully that's clear. If I need to skip, ask questions if something on that is not clear. Ether Bitcoin pair is taking an interesting turn to me, and for the Sunday report, I'm going to do a little bit more work to this chart. I see potentially that it holds this area, 0.06 area in a WXY. We've got a weird correction in the middle of this, but it's still bearish, best I can tell, and it's very incomplete from a correction standpoint. So I see a WXY potential holding here, but if this is a 1-2 and a larger C, then we're going to head down to 0.055. So I am going to make the WXY black. So I'm just going to take away this and put a little bit micro to that, and then I'm going to add a red 1-2 into this region. And we won't really know what it's going to be until it hits the 0.068. But it's interesting, Bitcoin obviously has had a bit more short-term strength in this move up, as shown by this little downward setup we've got here in this pair. Again, I don't trade this pair anymore, other than just turning on my Ether Bitcoin grid bots. Like they're excellent, no leverage, just basically every day making a trade in that. I mean, like even in this chop, there's just hundreds of trades, and it's the most laziest thing. I used to leverage trade this when Kraken allowed it, and I'm not allowed to do that anymore. So I just don't trade it anymore. You can do things like trade of differentials in the future position, like right now be short Ether and long Bitcoin. That's a low risk position. You can do stuff like that if you would like. I'm not doing that stuff anymore. There was a day when I did that stuff actively. I don't know, maybe this chart is less used to you guys. I've thought about maybe getting rid of it, but I don't know. I think it's kind of helpful at times, regardless that I'm not really trading it. I shouldn't say that, because as we get into big moves down, then I want to be longer Ether on a more swing basis. So I will vary my core positions. So I should say that I'm not doing anything in this mess other than what the grid bots are doing. I mean, this is not worth trading this tight range here, personally, to me, but some people may feel different. And then GBTC, again, the long term, it's almost not worth talking about the long term chart because it's so dilapidated. I mean, what's dilapidated? I mean, that's like kind of like a term that we'd use for an old house, right? Like it really is dilapidated with that discount. I'm still personally looking for a gentleman's exit in this and going to Bido. It's been way more fruitful trading, and I love those options. I can hedge it off and all of that good stuff. But managing it for now. But I still prefer. I mean, I just really don't believe the 4. In fact, I should just change the chart. Even if we held this bottom, I think it's a 2. I just have a hard time believing the 5-digit GBTC level. But if Bitcoin is in my my count that's primary, then and it's going to million over the next 5 years, then I guess it makes sense this could go to 4 or 5 digits. At any rate, I don't value talking the long term. However, this setup is worth talking about. Or looks like we got a little extension at the end of the day yesterday, but it still looks like we need a very healthy. Again, this was our 2, and so far this is a very tiny 4. So I ideally see a more developed C wave into the 989. It is always possible, of course, this one extends the third first again, just like I talked about on the coin charts. But you know, just like I don't know where my cost is basis on this. I have it written down. But as this once we get in the 2, and if we do get this third, somewhere up here is my cost basis. You know, my long-term portfolio, and you know, you may start to see me exit it, and I'll be taking surveys on whether we want to keep this chart around or not. Some people may want to do that. Some people may have cost basis way higher than I do and may want it around longer. But I'm kind of excited to get rid of this chart, to be frank. Especially when I figured out the synthetic BIDO chart, I think it'll be more fruitful for us. And again, using options to hedge it, or options to get income on it, or options to leverage it, not leverage it, but gamma to go long the gamma. You know, BIDO has so many options, options, quote unquote, pun intended, for trading it. So it's just so much better than this one. And it seems like, you know, I don't know if you guys know this, I don't know if you guys remember the BIDO Magic Bus algo. Again, it's not available on Seeking Alpha, but it went long, and I must have gone to the refrigerator or something when the algo took a position for me. I didn't miss it, because usually I have it on TradeStation, and it says, you know, order filled, and that would be the algo hitting, because I do have it on automatic buy and sell, and that thing's still long. It has not hit its stop. So that you know, I'm really excited about the as we go into bull market. The BIDO Magic Bus algo is going to probably be kick ass, excuse my French. So we'll see. All right, so I'll do questions now before just order of events. I want to clarify, just people that are new to this. So I go through Bitcoin, Ether, GBTC, and the Ether Bitcoin pair, and then I do questions, and then I go through all of the altcoins that I put in my weekly report. Those are the ones, the altcoins and equity charts that I mainly trade myself, that I focus on a micro level, and then I hit requests that people put in threads. So that's kind of the order of events. So right now, let me know if you have any questions on these. Hard pass on the wrapping. Yeah, that's a good call. In terms of waiting for the wave 2, isn't this a risk as well, given that if I compare it to the gold chart, gold did not really have a strong wave 2 since 1620? That's always a risk, Nut. I mean, it's always a risk. Like, I mean, if I could say, you know, how do you manage that risk? For me, I have a position, right? Like I said earlier, have a position. Don't miss not having a position. Some people that have such cold, wet, you know, afraid of getting their feet wet, are sitting here without a position. Well, you know, I'm not in that position because, you know, again, everyone, you know, when I was dollar cost averaging, people were asking me why the heck I'm doing this when I'm looking for lower. Why? Because of this situation, right? The same thing that you're asking me, you know. But to me, wave 2 is the question of between being aggressive or not, right? Like, it's not a question of being long or not. It's a question of being aggressive or not. Like, you know, and as a person that trades pullbacks, I want the pullback so I get a cheap price. If it just keeps going up, I'm not going to keep, you know, I'm not going to continuously take profit all the way up, right? Like, I'm going to get profit to a comfortable level, and then I'm going to wait for the pullback. That patience that I'm talking about has made me money over the years. Yes, every once in a while the market gets away from me, but guess what? It'll come back at some point in time, and I will get what I need, right? Like, you have to learn that. You've got to learn the patience. Like, you know, again, and I'm not talking about that you shouldn't be long. Again, I'm not advising everyone what to do, but in my opinion, I certainly would not want to be without a position right now for that very reason. Yes, it might get away. Like I said, it might go directly to 17.6 and we don't get a pullback until way higher. Those things are always possible. But again, I'm not crystal balling here. I'm talking about, like, again, everyone, I always say this almost every webinar. If you are a person that is only focused on the money you can make, you will not make it here. If you have to actually spend more energy on the risk side, because there is no risk in not having a position other than opportunity cost, right? But in terms of if you're a person that only thinks about what you can make and therefore are always leveraging up and always getting aggressive, then you're gonna burn out, blow up, and you will be so debilitated financially that you won't be able to make money. The one reason I can always adjust my position because I always have some cash. Like cash is a really important position to have. You know, again, in the long term, cash, it loses money, but the reason I have that cash is so that I can make use of opportunity. And if you are now chasing this and getting all levered up, wondering about, you know, whether this market will get away from you, I'm sorry, but you are going to lose this game. You're just going to lose it. It just isn't going to work for you over the long term. Again, it may not be this time, it may be the next time, or maybe you get through 5 of these where you're just so leveraged up, you're making so much money. But that kind of mentality is not the long-term make it in this game type of mentality. That's not the psychology you want. So I'm asking you, I'm not trying to criticize the question. I'm trying to turn it into the proper mental acumen that you need to be successful long-term, right? And so you just want to wait for those pullbacks, all right? You shouldn't be levering up here thinking this market's going to get away from you. That is the wrong answer from a psychological mentality, and it will blow you up. You know, again, it's, you know, I don't, you know, if you are long enough not leveraged up and you have the cash flow to add more, you know, again, whatever from your day job, whatever, that's fine. But too many times people get ahead of themselves, don't have the cash flow to support their position, are leveraged up, and then at the end of the day, you know what, they're quitting, and you know, and they're, you know, they don't come back. You know, like the guy I talked about earlier, he was FOMO king. Again, I don't want to name him, but he was FOMO king. He would ask that same question all the time. And why aren't we in this move? Why are, you know, this market's going away from us? Blah, blah, blah. And the guy went broke, right? And again, I'm not going to name him, but I mean, what a superstar in terms of in terms of supporting what I'm talking about. All right. So like, again, like, you know, come back to good process. What is the confirmation for the bottoming in? I think I went through it. I'll go through it again. 5 waves, pull back in wave 2, break out over 5 waves. Always a case. So we'll go over that again in Bitcoin. 5 waves off the low, hold wave 2, break out of resistance. Simple as that. Against confirmation, I'm not saying you have to wait for confirmation. I am never saying that. Again, I'm already long because I don't want to be short, right? Like, you know, again, like I'm not worried about the market getting away from me because I'm long. Am I aggressively long? No, but I feel very comfortable being long enough to where I'm having an increase in my net worth, right? I'm in for the long game, right? But if you need confirmation, if you're one of those people that has scared wet feet, you know, scared feet that don't want to get wet, then you want the 5 waves, wave 2, and break out. But the thing is, again, remember, confirmation is not certainty, okay? I'm giving you the most probable indication from the market that the bottom is in. Can it be possible to get what I just said and for the market to break down? Yes, it just becomes very much less likely. Confirmation is not certainty. Certainty in markets is at all times 0, okay? I just remember everyone is swimming in probability. If you want to trade, you have to let go of certainty because it does not exist, all right? It is a lie. If anyone tells you that, you know, all of their trades win, they are a liar, all right? If anyone tells you that you can know when a bottom is in, they are lying. Now we can say that, you know, high probability confirmation, so to speak, quote unquote, you know, the best probably you can get 5 waves off the low, hold the wave 2, okay? I'm not giving you all the levels because we don't have all the levels yet. All I have here of any certainty is the wave 4 support. I don't know where this wave 2 is, this red wave 2 is going to show up. Again, we're looking for 5 waves, wave 2, and breakout. But and then this is where I trade aggressively. I don't trade on the breakout. I trade aggressively on the pullback because I like cheap prices. And this is a lower risk trade. It's a lower risk trade to buy when you're coming down to support than chasing a breakout, because breakouts, you know, we could break out and then come back down and break out again. And you know, some people that leverage up at the breakout could get blown up and then the thing gets away from them. That's very, very common, right? So I leverage up. You know, I'm not going to put a lot of leverage on, but I do a little bit of my leverage trading near pullbacks because the stop is just right below it and I hardly get blown out, right? Like, you know, it sounds so simple, but it is. It actually is. That, you know, you should put your biggest position near a stop, not away from the stop, not at the breakout. But anyway, again, this is not certainty that we get when we get that breakout. The bottom is in, but it's, again, confirmation means highest probability situation the market will ever give you. That's what confirmation means to me. It's like the highest probability that the market will give you. And then let's see, less useful. Sorry, I don't know. Yeah, I'm not sure what that's referred to. On Ether Bitcoin pair, I think it's worth following, even though I don't trade it, because when he's to adjust. Well, yeah, I agree on that allocation. I think the micro becomes less useful on that. I mean, unless you really want. I mean, it's great for grid bots, but I like the grid bots do the work, and you know, don't have to worry about it. And again, you know, on the allocation, I agree, but it's a little bit easier. It's a little bit easier to do major allocation and get bigger swings. So like we really drop here. I've already been favoring Ether in terms of some accounts. Like, you know, I have the SoFi credit card and like lets me buy crypto. Every single reward I got out of there, I put it into Ether on there. I haven't put any of it into Bitcoin for a long, long time. In terms of, you know, some of my shorter term accounts, it's mostly Ether, favoring Ether for the swing trade. So I've been doing that. So, you know, we drop into here, it's just going to be more favoring on Ether on that side. And whether it drops here and Ether and Bitcoin come down in USD basis or not, I don't know. Like most of the time, this chart is inclined towards USD chart, but it's not consistent enough to make it a real edge. And so, you know, we'll see, but it'd be interesting. Yeah, but I know I generally agree in that. So Bido, Tammy says Bido. I don't know if you didn't, I don't know if you finished. I don't know if you finished your statement there. I don't know what you're saying, Bido. But anyway, how old is the old Bitcoin chart? This chart is, let's go back to the old chart. This chart is 18 months old. And I'll tell you its iteration. I mean the looking for 5 waves off the 2018 low is now 3 years old, right? Like, so in the basis of this chart is actually 3 years old. 2018, no, almost 4 years old. But there's a couple iterations. We extended in the third. So I'll give you the history of iteration. We extended in the third. So where this fourth was expected to come down, had to raise up. That's not uncommon. And then the second is we topped in the B instead of getting to 125. So we had to add a larger ABC. And then we lost a degree at 24, right? Everyone can remind me, so 24. So there's a couple iterations of this chart with adjustments. And it was when we broke 24 where I said, hey, we could possibly go all the way down to 3K. And that's, and I mean, 6K is better on the long-term chart, but that's where this alt became, this alt existed a while too, but it didn't come into focus until we couldn't sustain under 16K. So this, you know, again, this is a real good example of, you know, how we use ElliottWaveTrader for risk to reward versus not crystal balling, because we'll, you know, supports, you know, like, you know, supports get broken. I mean, it's just natural. But the thing these pivots do is, again, this pivot is key for changing the trend upward. And the pivots that we broke on the way down, 24 was the big one, and then now piercing 16K as a warning, is pivots on the downside. You know, again, I never predict that they will so much hold, but that those are good places to take positions. That's the main thing. And because the position is low risk, you've got to stop below it, and then you know what to do, versus saying, okay, you know, Ryan's got a level here, that level is going to hold. That is not the case. Doesn't work that way. But when they do hold, they produce, again, what I call skew, really high risk to reward trades, because you are taking a trade very close to a stop. And if it does hold, then you get this big run on the other side. And so, you know, to me, the skew here is now turning to the downside, where we're coming into resistance point. I'm not saying that resistance is going to hold. I'm simply saying I'm a little bit interested in a short trade up here when it looks like this count is full, because the skew is big, you know, the resistance will be 27.6. I have no interest in turning my whole portfolio short. I'm just very interested in taking some hedges in this 27,600 region in case we do get that breakdown to 13K. Again, that's me not predicting that 26.76 will hold. It's me simply saying that the skew of the trade flips over, risk to reward flips over to shorting versus long side. And again, managing your portfolio is key, because I'm not looking to short the crap out of my portfolio. I'm far more interested in the longer term chart of Bitcoin that has all its skew up towards, you know, even a million one day. I have no interest in going, draining myself of my long-term Bitcoin by shorting the market. But I am interested in taking some little hedges up here, a little bit of put options on Bido, a little bit of, short the futures, just very carefully to see if the trade works. And if I get stopped out, I get stopped out. So that's how you use Elliott Wave properly versus looking for it to be a crystal ball. That doesn't, I mean, it works sometimes, but that's not really the best way of using it. Let's see, what do you mean leveraged up? I think you mean something different from something like leverage in the futures. No, well, I mean, there's multiple ways of doing leverage, right? Like you can take a loan and buy, you can use the futures. I definitely mean futures. And I mostly mean the perps traders, because the perp traders are the ones that go crazy futures. I mean, the CME hardly gives us any margin for those that are limited to the American markets. But when you look at, like for instance, the perp funding flipped. When the funding is negative, then the market is bearish, and that means that everyone is leveraged short. And then when the funding flips positive, funding rate, everyone starts leveraging on the long side. Well, last week it flipped big time, quick, from like short negative to long. So that's a little bit of a signal. I haven't looked any deeper than that, how leveraged people are and all that. But when the perp funding rate flips like that, then you've got people levering up, and that's definitely the case right now. The funding rate is positive, and so longs are paying dearly for their longs. And that's usually when it has issue, or longs start to get into trouble. So yeah, I know I do mean futures, but I was saying it very, very, very negative. So I trade on Kraken, which has less liquidity than other majors and therefore usually bigger candles. Should I base stops a 764 retrace on Kraken? Yeah, I trade on Kraken too. To be honest, on most crypto exchanges, I don't put my stops on exchange. I put a manual alert in TradingView. The only difference is when I'm on leverage, like again on futures, I will put a stop on exchange. But again, I don't trade with, I don't get leveraged up enough. I've outgrown leverage. Like, I think the funny thing is when you have less money, you leverage, and then when people make more money and they have more money in the bank, they just use leverage less, because their money becomes a little more precious. That's one thing I've seen true of myself as my my accounts have grown over the years. And so I don't put Kraken, especially, I don't put because with Kraken, if you get a bad wick, it'll come back, right? So I prefer to, again, one, I don't use leverage on Kraken. Number two, I put an alert on TradingView. Some people just don't have the discipline to use stops, and you got to have it on exchange. But the problem is you'll get a bad wick. There's no doubt. Unfortunately, Elliott Wave pivots will not save you from a bad Kraken wick. So like 764. But generally, it's even more general than that. I don't stop out unless I see a little consolidation below support, because sometimes you get, even Elliott Wave is not so exacting that like you hit the 764 retrace, you automatically bounce. Often the case, but sometimes you get a little pierce of it and then it comes back. So I always like to see the market say, okay, we're not going back, right? Like a little bear flag underneath the support, and then I'm done. That's generally the way I play. So I'm not a automatic stop out. I'm a manual stop out person, but that's also because I've traded so long and I'm confident in stops, so that like some people just need to have them on exchange because they're not disciplined. But I've had enough pain in my trading life to learn discipline, right? So that's how I trade. I'm not giving you advice on what to do, but I'm telling you what I do, and hopefully it helps you learn from what I do. Perp trading, I mean, that's yeah, I assume you're asking what perp trading is. Talking about the perpetual futures that exist on most crypto exchanges. I mean, you know, again, futures in the American CME sense are dated contracts in perpetual trading. They're not dated contracts, and to make that happen, they have a funding rate. So the longs pay interest to the shorts, and the shorts pay interest. So when the funding rate is positive, the longs pay interest to the shorts, and when the shorts are overly leveraged, they pay negative funding rate. Then they pay to the longs, and the funding is great. I forget the equation, but it's basically like if the futures is trading below spot, then there's a negative funding rate. If everyone's very leveraged long, then it pushes the futures up above. So it's almost like in American contract, it's almost like backwardation versus contango in the futures. In this situation, you don't have dated contracts. There's no such thing as backwardation versus contango, but you have a relation to spot, and that creates a funding rate. So that's the perpetual. It's basically an unexpiring futures contract. Of course, these are the ones that are like 100x leverage or 50x leverage or whatever, crazy stuff. Can you show the BIDO levels, please? Yeah, I mean, yeah, I want to try to start using BIDO a little bit more. Again, the problem with BIDO is because it's not traded this long, right? So I created the synthetic version of the chart based on taking the Bitcoin and then doing a multiplier, and I've got to check that multiplier. That means it's not accurate to a dime. It's just not possible for me to do that. But it's the same. It's basically the same. I mean, this is a pretty accurate, roughly 720, 24, 25. That's resistance for this 4. And if we get, it's the same thing. If we get 5 waves, I've got support here. I mean, it's interesting that it's, oh yeah, no, it moved. So yeah, no, I still prefer this to be a B wave. So we've got, let me move this back, sorry. So 1172 is still the support for this 4. And then we'll map the, I don't have the wave 2 on here, but it'll be around the 11 region. So I mean, this region is expected to be a range unless we break out aggressively over 1720 and then 27.6 in Bitcoin. And right now 1185 is, again, I wouldn't use that to the nickel or to the dime. I wouldn't use it in Bitcoin to the nickel or to the dime, or even to the 50. Again, it's a matter of sustaining, getting bear flags underneath that support level where I personally stop out. So, but this one's definitely not good to the dime because actually even the closing price is different from the actual closing price. It's just as accurate as I can possibly give it. All right, any other questions before I move on to the weekly charts? Weekly charts are kind of a mess, so I'm going to try to run through them fast. They're really, some of them are very messy. So I'll hit those. If any more questions come up, we'll start on those anyway. First one, BNB. Again, my long-term target here is 1400. Nothing there has changed unless it breaks like 140, I think it is. So not much to add there, but this has turned into an absolute mess. It's completely valid that this turns into a B wave and drops, even if we get 5 waves. But it's the same deal. We've held support nicely here, so it's possible we do get a B wave and get a larger 4. Support here is 275 for this wave 4. I started marking out the micro for this 5. It's possible we top on a B wave and come back down into support. In fact, it even looks like a B wave on its structure, but we'll see how it goes. But regardless, it does look like it's going to work out 5 waves to 334, whether it takes the B wave back to support or not. And then we'll see the real deal. We'll mark support for the wave 2, and then versus breaking down into this 3rd, and then finally 140. So not much to do with this chart here unless you're trading it aggressively. I mean, you've got a line in the sand at 275, and you're trading it aggressively short term. To me, this is accumulation to me. I mean, it's a good long-term chart and should go to 1400 one way or another. And to me, it's a slow accumulation. I will be accumulating a lot in the 200 to 140 region. I haven't been doing much lately with it. Rune surprised in the last couple weeks with finishing 5 waves, and this is different from Bitcoin in that it has a sure clear bottom that's solo. Bitcoin basically has a sideways correction into its 16 low. This one has a solo bottom. It's sort of lonesome, so that makes it potentially bottom in. I'm still a little skeptical, but again, same deal. We've got a wave 2 here, support at 112. So I have a grid bot going on in Rune, so I am going to be playing it. I'm not so long up here because I think my grid bot cuts off at 2 here, and then 114, 110 on the bottom, I think is where I set the prices. So I'll be accumulating as it comes up. It goes down into it and then coming up using those grid bot. And if it breaks 114, we'll see if 90 cents holds. If it breaks 114, I'm very doubtful that 90 cents holds, but that is the ultimate level of support that I have. So that one's interesting. Aave, a serious mess as well. Very much looks like Bitcoin, and big morph from the chart. I do kind of prefer the A, B, C. It's if this one continues up and forms 5 waves up into 127 or higher, it's far more likely the B wave. If we top in 3 waves here and hold a B, then it's more likely a leading diagonal for the circle 1. So if you're a bull, you kind of actually want it to drop here into B. If you're a bear, you kind of want it to carry on. For me personally, I have a decent amount of this in my retirement account. It's the only alt I have other than Ether in my retirement account. As it runs up into 150, I will take profit and cut that way back down. If it does hold in this B, then I may add a little bit more actually. So to me, that's kind of my tactics on it. H-bar, I notice it's trending on Twitter. There must be something going on in the project, right? That's getting pretty heated. I think it's interesting for a potential bottom for sure. We can zoom out. I want to clarify the way I'm trading the long-term chart because it's got a moon count. Most moon counts fails. Remember that, please. The moon count is crazy, looking for 44. Here we are at 7 cents. But me personally, practically, I'm only trading from a target of 15 to 41. That is the 382 to 415 to 618 reach extension. Sorry, not retrace. And that is the normal one for a third. So if it gets that, then it's more interesting to talk about the moon count. But that's what I'm trading. I do not have a position currently because I end up selling my alts for tax purposes at the end of the year, and I haven't gotten back in this one yet. But I am going to enable a grid bot on this one with a lower end of 4 cents. We'll see if I have to correct that. So I will be scaling into this box. I may have to move it up, but right now that's my plan. So that's interesting, and that is the red count to target. That's about all I'm going to trade for right now, and then we'll see how the 2 goes for the bigger trade. Let's see, Link, nothing bullish in Link yet, I don't think. Let's see, definitely kind of a junky chart short term. Yeah, so it looks like trying for 5 waves here. If it gets 5 waves here, it's more likely an ABC and 2. But again, this one, it's got to sustain itself over 11.5 to be bullish at all. So not much to add there. But long term, great. I mean, I'll be accumulating in the 4 to 3 if it'll give it to me. 4 to 3 region. Matic, again, Matic still got a target of $10.05, but the question is whether it does as expected and gets this B, so it should hold the B. I'm the only bullish alternate I have in this is that this is a truncated bottom, and so what I will do is once we get 5, if we get 5 waves, it's got to turn here. If we get 5 waves here, then I'll map it to as an alternate. I don't see it as reliable, but hey, you know, this market may surprise us to the upside for sure, right? So I will do that, and we've got a lot of interesting charts that are trying to. Lido is, I see this far more likely to be the short-term bearish count, but if we top here, if we get 5 waves, it's just, my problem with it is this one is too high to be the third reliably. So if we get a 4th and 5th, again, it's like, I forget which chart it was. It's more, yeah, Aave. If we push higher, it's more like Aave and should come down in the C again. But I am bullish this chart as long as it holds over 64. I will take a little bit of profit if we get up into this 5th, because I think it's more likely the bearish count if we do that. It's one of the, this is one of the paradoxes of Elliott Wave. If you don't have the 1st to the 3rd by the 618, definitely by the 764 extension, it's far more likely an ABC and more likely comes right back down. So that's one of the paradoxes. So it's like you want weakness in the first to the third, kind of relative weakness versus an ABC tends to be stronger. And that's a great example of how strength leads to weakness, because it, you know, I don't know, it's again, it's like voodoo magic. It's far more reliable. You want to have that first to the third under the 764, preferably under the 618 extension. And the 618 extension on this 268, and it has no room to put in that fifth reliably. So I think this is very much bearish. Again, it's one of the paradoxes. I've written articles about this for subscribers. If you don't understand that concept, ask for an explanation on the board. It's really, it's a very subtle paradoxical thing that is incredibly valuable in terms of reliability or probabilities. Mask, again, I still love the long-term chart, but I don't know what it's doing down here. Again, I continue to have a small accumulation. I am, you know, it's kind of a moon chart looking for 69. That's kind of insane. It may be that it's working on a diagonal into somewhere between 388 and 591 for this one, but I'm just not convinced of it yet. So I need to at least see a lot more action in this. I'm not doing anything with my position because my position is simply not large enough to really care. But I'm going to let it work itself out. RPL, again, questionable wave one back here for sure, but pretty decent 1-2-1-2 as long as it holds over $10. That gives us a crazy moon count. Possibly could, this is 3 waves so far, so it possibly could top in B. So if it fills out, so what's the difference between B and the start to this 3? 5 waves. 5 waves or 3 waves. Right now it's 3 waves. So you know, again, I have a tiny position, so give me a pullback, and if I don't, I don't. But we'll see. Solana, I am adding back to the report. I am starting to get interested in Solana again. Let's go over the weekly charts so you guys know what we're dealing with. This is questionable as 5 waves, very tiny 4. This is probably the best stop out we've had, right? Because we look for a bigger 4 way up here. We've been out ever since. Well, I have been. Jason has been. Some of you guys may have hung on to it, loving the project, but very, very good stop out. Now we're ready for considering it again. Or at least I am. I don't know where Jason's at on it. The only thing, sorry, I did that prematurely. The only thing I would say is it is entirely possible we see a B and C and come back down. To me, this is a little bit noise to me, unless it's clearly a B wave. We'll see how it forms. It does look like it's getting a 5th wave here, so that's good. I will add levels to this as we have more clarity, but it does look like a very severe diagonal. And so trade for me is when we get this level, get a top, we'll add support for the B. I will call it alternatively a 2. So of course the C will go shorter than the impulse. Impulse will probably get up to like 160 region. I need to do a lot of work on the long-term chart to get my confluences of larger fibs versus the smaller fibs and blah, blah, blah. But there is a trade here regardless, doesn't matter. There will be a trade here in this B, alternatively called 2, and I will work on those charts as we work it out. But that looks like a good one because basically the 5 is forming here, and I can take off this ABC actually. Let me do that. Let me actually clean this up. So this would be either an A or a 1. This is either a B or a 2. What's the difference? The difference is the projection upwards afterwards. So, but regardless, we can take a trade and then, you know, just roll up a trailing stop pretty easy. So it should be nice. Stop out if it breaks that, because if it breaks that, then it's going to go to 2 or something like that, which I haven't looked at in a while. So I'm interested in this one again. So I'll put it back to the report. It's been a while since it's been there. XYO this is nothing. There's nothing about this that says to me that it's bottomed. It's pretty, excuse my French, very shitty action down here. So it may be that it gives me a diagonal or something, but right now I cannot say that it's done anything that makes me want to have a position. It's also just generally a poor liquidity. So to me, this is still on my stocking list. STALK, not STOCK for Christmas. It's still something I'm watching for a potential position, but not interested right now. SQ, this is one of those ones like I still can't believe I own this one. To be honest, it's just such a crappy chart. But if it gets this red, if it gets this red, fills in red, 5 waves to 105, it could be interesting. But right now it is not the least bit interesting coin. It looks like it, so to me, this changes the way this is moving. So I'm going to take the red count off cautiously, very cautiously. It looks to me like I've been wrong on the structure and that we are filling in 5 waves here. That's a good sign. You know, as you know, I took a position. Was it this week or last week? I don't remember. I took a small position, but I'm more interested in getting aggressive in this too. So again, same game. Once we have a top in 1, 764 retrace added for 2, add to a more aggressive position. I'm gonna take this red resistance off. It still really needs to fill in the next degree, but the next degree is so crazy on the skew side that I mean, we'll refine all this, but it's kind of aiming at the 200 region. So I don't know if it really has it in there. It's entirely possible we get a larger ABC, but regardless, I'm very interested in trading this 2, which I will call alternatively B just for risk management's sake, so everyone doesn't go insane. SBNY, again, this is the competitor to Silvergate, hasn't done anything off of this low, so the A to me is still in progress. None of this is all corrective, so I have nothing good to say about this action. But again, I'm interested in this for long term. I still have a few shares. I will buy shares lower, but my position is so tiny that hardly even worth talking about yet. All right, so any questions on those before I go to the requests? What do we got? What do we got? What do we got? Let's see. Could the Matic bottom structure not also be a 1-2-1-2? No. And again, when a lot of you guys like to ask, could this be? Well, I guarantee you, if you ask me, could it be? I've already looked at it because I look at hundreds of charts. So it had its chance to be a 1-2. So I had this as a 1-2-1-2 here. So this 1-2, but this is not a 2. It just doesn't have it. So again, symmetry of the ABC. So you can see the C, the would-be C here is not symmetrical to A, not even close. It's like C's are never this much shorter than, again, all these fib nuances are so good to learn. I mean, a lot of people think they're voodoo, but I mean, to be frank, I don't know why they work, but they work. So if you do if I understand what you're saying, this 1-2-1-2, you're relying on this being the 2. No, I would call that truncation. Here's why. So again, we're getting into like the very nuanced things of Elliott Wave 1. This broke. Well, it's not because it broke. Oh, no, so it almost broke 100. So again, I don't trust a 1-2 after it breaks the 764, so it's way below that, right? That's one. The other is that it would have to be A, B, C, but the problem I have with this is that this C is not longer, not even close to longer than the A. So it's a 618. I don't trust the C that's under 764. I prefer to hit 100. So I wouldn't trust the ABC unless it hit down here. Of course, that would also make an invalid one too. So that's why I would not count it that way. That is why I do not find that. That is a very low, it's more than a low probability view. I almost want to call it invalid, but it is not true that it's invalid from the Elliott Wave perspective. There's a difference between invalid and low probability, but it's so low probability I can't trust to count like that. So that's your answer. Nut, if you want more perspective on that on the board, happy to go into it, because I know you're trying to learn Elliott Wave better. Ryan, what would be the difference in the long-term projections in your 2 Solana accounts? Again, I don't want to get into just we're not doing too much fib work while everyone on there, but it's basically like so we always project the 3 and 4 and 5 off of the 2. So if we get either the 2 is here or the 2 is down here, and so you would move things commensurately because these are it's not arithmetic, these are log fibs. So you move it down, and it's like you move it down from 8 to 4. Well, that's basically like 80% down, right? So that would move this not by 80%, but it would change projections significantly. I don't want to, to me, I mean, personally, a little early to even talk about that, right? Like, I mean, this is a moon count. Like, do we even get the moon count? Like, again, I always, urge you guys, don't trade for the third, trade for the one of the third when we get it, and then let's see if it holds the 1 2 1 2, and then let's talk about the third. But but you can even still get another count here is reasonable, is just ABC, right? A, B, C, and it doesn't even get over 3,600, doesn't even get up to here. That's very reasonable, because that's how most altcoins go, right? That's why I've started more and more to call altcoins just shit coins, because they just, even Ether is a big ABC, like, honestly. So if Ether is a big ABC, is this one really going to be a big ABC or an impulse, right? Like, Ether already over many cycles has proven itself to be an ABC. It just happens to be one that does a really good job of playing out every cycle, versus a lot of altcoins just never ever come back, right? That's why you shouldn't hold any altcoins. Oh, did I miss GMX? I did miss GMX, didn't I? Okay, I will go over GMX. Again, I'll be honest with you. That's explaining the difference, is where the 2 shows up, that projects everything out. But the problem is, we're talking about out here. Again, I'm not trading any of these long-term counts, guys, on shitcoins. I'm trading this closer in fibs and then seeing if the trade is worth building, because it's a long ways from proving out that it's going to actually do this moon count. And again, even it could be be a good trade for a big ABC into 3,000 roughly, versus that's a lot of money to be made, versus getting a third up to 77,000. I mean, come on. All these moon counts, they just, we've had very few actually work. I mean, BNB is one of the only altcoins that, Bitcoin and BNB are the only moon counts that have so far proven themselves. So that's food for thought. 2 out of thousands that we've gone through. But it doesn't matter. I mean, again, some people say, so the next question is, why do you have a moon count, right? Why don't you just put an ABC? Well, again, the moon count shows a lot of lower fibs for me to trade against. It's kind of like the structure for the more minor fibs. So that's why I always start with this, and then I work in. And there's no Elliott wave where you just work the micro out. It just does not work. That's really bad Elliott wave work. So you got to have the long-term count and then work in. And so that gives me all of the stop information in the lower degrees. So I'm going to have the moon count and then work in, and that's that should help. All right, GMX, I missed that one. GMX has been a great 2022 hovering and breakout. I'm looking at this chart. So I don't like this action in here. It's a bit confusing, because we have questionable wave 1, 3 waves down, which is bullish, 3 waves up, not bullish, 3 waves down to here, 3 waves up to here. So we've got a series of 3s going on, and that gives a lot of unclarity. It doesn't change the long-term count, because this is sloppy, but I mean, we're just hovering near breakout, right? So I suspect a potential here is this diagonal, which is a large ABC. So A, B, C. And what we're seeing here with all of these 3s is we have an ending diagonal for the C, which is going to make it messy. It's going to forego this moon count, but I'm going to have to watch this closely. I'm not really sure. I mean, I don't have a reason to be bearish, but I don't have a reason to be any more long than I have been already in this one. It honestly would be cleaner if we get another possibility. I think is, I hate to say the word I think. It's like the worst thing to say, right? I can see another situation where it'd be a little cleaner to me is that we've got an A, a B, and this is simply an ending diagonal that works. So it came down in 3 ways, comes up in 3 ways, and then we ended up, so that would give a setup for diagonal. So that'd be a little cleaner too. That would be nicer. And then we can say, okay, maybe the moon count, quote unquote, is potentially playing out. Although the ABC has to be a reasonable alt as we get up in there. So I'm not sure what's going on, micro. I need more information here, whether it breaks below this range or it breaks above this range. That'll help me clarify what, unfortunately above this range and gives me this ending diagonal at best, which is unfortunate, but that's about what I would call primary. Let's see, what's the title of that paper of yours about the 618-764 concept, so I know what to search for on the site? I didn't do a paper on it. I just wrote posts. So like I'll just go over it right now. I mean, it's really quite simple, guys. So it's like let's pick on a miner because miners are the worst right now. Let's do I think Shiba, which everyone is crazy about, is a good one. It's very simple. Yeah, this is a beautiful one. All right, so someone asked for Shiba this week, right? And so let's say someone disagrees with me that this is an ABC. Okay, that's fine. Like I put an ABC on this. I wanted to see a fourth back here to get a more certain fourth. You know, that's debatable. That's fine. But there's a good sign that this is an ABC when it topped in 3 waves, and that's crystal clear. Okay, but that doesn't matter once you come down and you've got a 764 retrace. So at one point in time, I drew this box, and this red line is the 764 retrace. Okay, again, I've said this over and over. 90% of charts that break the 764 retrace, and I don't care if it's an ABC or you want to call it a 1-2, they just don't come back, like 90%. There is potential that it goes to all-time lows and then tries a new impulse, but most, after one has gotten lodged into a lifetime downtrend, I actually don't know of any that have come back and gone to all-time high. No, I'm sorry. ADA was the only one last year. Of course, ADA just failed in an ABC in 2022, but we had a very nice rally in ADA after it did go into a lifetime downtrend. That's the only one I know that came back after breaking the 764. So 90% may even be conservative once it breaks that it ever comes back. Now SHIB is even worse, right? Because okay, we got a nice rally here. Maybe this will end up to break out. Nope, broke the 764 retrace of that. This is a dumpster fire waiting to happen. So my primary count is quite simple. You know, it should get a fifth wave down to here. It's just very simple. I mean, you could take, you know, I prefer fibs on log, but it's not as big deal in retrace, but it's very simple. Just take your fibs, put it in the bottom. It looks like I was off a little bit here. It looks like the 764 retrace is there. So I don't know what happened. Let's see if there's any, yeah, I'm not sure. Maybe, let's see. Yeah, it looks like I was off a little bit. There is wandering. I mean, sometimes I put up the lock on so it doesn't move, but regardless, it creamed the 764. Oh no, I wasn't off. Oh, there it is. I don't know what I was doing. All right, it was perfect. All right, so you just put your 100 here and your 0 there. So you know you're looking at anything. I mean, you can go into anything that's coming off the lows, like let's go to coin real quick. It doesn't matter. Like it's again, every once in a while something survives. More likely on the micro versus the macro, but like that SHIB is like its long-term chart. It's like, you know, it's up multiple X and then completely retraced all of it. It's not coming back, guys. Like at least the probability says it's not. So look at coin here. No matter what, let's say even if you fail this fifth, right? It looks like it's going to get it, but you can get the 764 retrace right here. You know, we can get rid of. Let me just get rid of all these ratios just so. You know, so no matter what, and you know, the miners are starting to break their 764 retraces. That's why I'm not, Marathon so far has kept it, but you know, again, you just don't, you don't want to be in something after 764 retraces. And I've seen a lot of subscribers continue to hold on. Silvergate, I mean, Silvergate's a great one. Like, you know, it probably never comes back, but we'll see. You know, maybe it'll prove me wrong. But very simple, you know, and so. You don't need me to tell you where the 764 retraces. You can just continue to move it. You know, the same thing will happen after, let's say it gets all the 5 waves up here. We'll do the same thing again, 764 retrace. The 764 retrace is for wave 2s or ABs. It is not for wave 4s. Wave 4s hold 50% of the third. So it's always a question of what fib when. So back here, the wave 4, it ideally holds the 50% retrace of the third. So we would do this and zoom out. So the 50, you can see that it just barely missed it right here. So 50%. We prefer to hold the 382. This is upside down, but 382, which is 618 in this orientation. We really need the 50% to hold, again, 50% retrace of the third, not of the entire, just the third right here. So it's what fib when, but wave 2s and Bs, you got to hold that 764, and it's a very lowest trade because you know, you can have your stop at the 764, you know, or you can have sometimes, you know, if it's really tight, I don't mind putting the stop at all the way at the bottom because that's invalidation and giving it. Then I watch for it to break the 764 and just consolidate under, and if it consolidates under, I'm out. So it's and again, if you wait for deep in that wave two before you get your full position, then you're very low risk. And I have a whole strategy video on that, about trading low risk, and which allows you to take a stop on a lot of trades before you get a big win and keeps you in the game. But those are other videos that I'm happy to reshare. All right, so where are we at in this webinar? We've gone through the weekly charts now. I'm gonna go through the requests. We've got 1, 2, 3, 4, 5, 6, 7, and then I'm gonna go through the algo review, and a lot of you guys will wanna hang up, but if you guys have burning questions about the algo review, the algos, you may wanna hang out a little bit. All right, so OP is a very crappy chart. I've missed out on some gains by stopping out, but well, I made profit, but so I haven't had a loss, but I'm not personally miss it. We will not see this chart on the weeklies. I may take trades on it, but they're going to be very, very small trades. It's completely possible that we have an ABC top. So it looks like it's not labeled, but A, B, C, and it's toast now, and starts going to new all-time lows. But if it holds as B, I might take a quick trade for the C. But I have no interest in, because it can be a larger C here. I have no interest in trading for 12 until it's very clear that's where it's going. So this is not a long-term, to me, this is absolutely not a long-term chart. This is a decent chart for some short-term trades. Right now, no interest in it, but I'm gonna see how this B goes. And I'll mark support for it when we've got a top in this A. But again, I would not hold this chart as it is not a quality chart, but it does have pretty clear structure for short-term trading. Although this was not clear back here. This is back to Matic. This one is a pretty questionable 1-2 as well. It may be that we have a truncated B, but we don't have that clear symmetry between. We could call it a WXY, but that's a great example of that kind of general rule being untrue. But this one's not as bad as Matic. It's fairly close to symmetry, where Matic was way off. So Doge, I don't have much to add to recent posts. Still pretty bearish. Let's see. And again, if as I said previously, if it gosh, my mouse is getting a little jiggly. If it fills all the way into this black count, then I don't have a long-term bullish stance. So that's so far it's like the B is held. It might do a higher B, might do a higher 2, doesn't matter. It is in very, you can see it kind of hovering over the lows, bear flaggish. So it should go lower, and we'll see if it surprises otherwise, but I don't see it right now. And so that is that's not a great chart, and we'll see if it, I always say that, there's always seems to be a reason to have Doge after it gets really washed out, because it just seems every cycle that it has a run. But I don't see a reason to own it right now. I'd want it much lower, and I would, I don't know, you buy like a couple 100,000, and or maybe less if you don't have that much money, and just see what happens. I mean, it's kind of interesting that way. Just make sure you take profit like we did last year, right? That was a good trade for us. But no interest in it right now. APLD, okay, so this chart's interesting. I have no clarity whether this is long-term bullish. Okay, it looks like an ABC to me. It's entirely possible that this is working on a leading diagonal. I do like the little higher lows here, but if I really have nothing, I have no reason to have this red count if it breaks below this low at 93 cents. But here's the funny thing I noticed. This is the 50% retrace the third, talked about that earlier, right? Kind of broke it a little bit, but it's put higher lows in cents, okay? The fib for a fifth, the typical fib, is $176. Okay, so I think I'm gonna take a position. I think I'm gonna buy 100 shares, okay? I usually don't tell my positions. I'm gonna buy 100 shares, it's $200. I mean, it's basically like, date night, expensive date night with my wife. I mean, dinner-wise, like $200 for dinner is one of our more expensive dinners typically. So I could forego a date night dinner. My wife might get upset about that. But if it runs from here to there, that 100 shares is $17,000, $600. I don't know. That's worth the risk to me. I don't care about $200, but $17,000 is some money I can, buy a new car with, or put a down payment on a new car. So, hey, I don't know if you want to jump in with me. I'll leave it up to you guys. I'm going to be emphasizing this is not a high probability chart, but I looked at that skew and I'm like, it really is either break. Best I can tell, it is either break 89 cents or go to 176. I don't know how long it'll take. I mean, that was just last year that it made this run from 3 cents to 33. So maybe it's possible. You know, again, it's highly speculative, and you know, there's no reason for options or anything, because why have the time decay? Because you know how long it's going to take. Just take the lotto and shares. I don't know. I'm going to do it. I think it's interesting. I didn't like this chart before, and I don't care for the structure overall, but you know, I don't mind a little gamble on this one. It's kind of interesting. All right, Marathon. Let's see. I forget which retrace. What retrace did Marathon do? So I still like in Marathon, because this C for 2, so-called C, doesn't have symmetry with the A. I still like this BC, and this would need to hold the 764 retrace, which is in the dollar region. So that to me is still very much possible, but possible that it's working on 5 here. So regardless, I do plan to, if we get a very clear wave 2/AB, I don't care what it is, I'm going to take a trade. And right now it looks like it'll land, no, sorry. Looks like it'll land at 415. And again, if I don't get this position, I don't care, because I really hate Bitcoin miners altogether as a business, fundamentals, technicals, the charts are destroyed, all of that. You know, I mean, to me, they are just money sinks. I don't care about this move here, but I will consider making a trade with a tight stop here, regardless of my feelings. So I'm gonna wait for that personally. I mean, you guys can chase the 5 if you want, but I have no personal interest. Let's see. Someone probably asked for a target for this 5. The ideal target would be, I don't think it's worth trading right now if you don't have it, if you're not already in. I mean, I know some of you guys are aping into these miners again, excited about them. And again, I'm going to be really clear. I don't care about missing the boat on these. You know, maybe I'm just embittered, but they are just, I don't mind taking small positions on them, but I just think they are really crappily run companies. And I feel the same way about, I think Crypto would probably disagree with me, but I feel the same way about Marathon, and I'm just judging by the simple fact that they were leveraged at the top. They had financing. It's just stupidity in my view, and I don't want to be part of a company that, as a shareholder of a company that does that kind of crap and doesn't hedge their risk. Again, risk management wins the game. Being conservative does win the game quite often. All right, and I am conservative. I'm conservative, but I have more of my net worth in crypto versus stocks. I realized this last week. I did all my numbers. I'm like, oh crap, I've got a little too much on the crypto side. But anyway, comp. I mean, this is a real dumpster fire. I have nothing bullish to say about this. It should finish a 5th, probably somewhere down in 11, and then maybe a wave 2. But I mean, this is heading to 0, best I can tell. The only thing bullish I can say is if it gets over 125, but then I would have to put on some alternate diagonal nonsense. I just personally, I mean, even if I missed out on gains on this one, I don't see the skew here. It just isn't the risk reward. I may actually consider short if I can find a way to short it, maybe in DeFi or something, but no interest in that one. FET, pretty sloppy, nasty chart. I mean, I know this one's getting hyped because of the AI, blah blah blah. Again, just even if a project is good, there's no reason for a token to go up in value. Just remember, guys, in altcoins, generally you have no rights to anything. I mean, GMX is different because they're giving you blockchain rights to cash flows. But you know, by and large, you buy these altcoin projects, and if you're basing it on the project having utility or whatever, you're kind of dealing with economic nonsense, to be honest. You know, and I'm not saying I love altcoin projects. I love changing the financial world, but that doesn't mean the token has to go up in price. And this one is a crappy chart. So I don't know whether it is a 3-wave top, and then it looks like 5 waves to me. So 1, 2, or it's possible that it's going to be a C up here, or it's possible it has a larger diagonal I don't even have on the chart. But the first question is whether it gets 5 waves or 3 here. This wave one of this supposed 5 waves right now is 3 waves, so it's a diagonal at best. So, and it's bearish below 15. That's all I've got right now. I mean, you can maybe, I mean, if I was to go long this, which I won't, it could be 15 cents trading for 40 cents. That would be some skew there. So you can wait for it to come down into the 18 cents and start to take a position in the fourth, stop at 15 or below, or sustaining below 15, because that would be breaking the fourth, and then trade it for 40. That's about all I've got. I wouldn't trade for anything on the long-term chart because it's a hunk of crap from a long-term perspective. Hive, again, I maintain that this has had 5 down after 3 waves. Let me go on the long-term chart. So 3-wave top in 2021, 5 waves down. That is very bearish. The red is an alternate, but far from ever being in play right now, not even worth worrying about. I do maintain that is an A wave. Even if it gets 5 waves here, it's most likely an A wave, but I will create the alternate if I do get 5 waves, and it does look like it will. As long as it gets to 430, I can call it 5 waves. And I might even take in a position in the B. Again, I might do that. We'll see how it looks, but I'm only trading for the end of its demise in 2, but I will do an alternate impulse as well. I'll unfurl the alternates as it gives information to do so. But again, this is a very, very, very crappy chart. And you play with fire if you have a sizable position. Don't play with fire. It's not worth it. We have so many other charts that are starting to show something interesting. Don't play with fire. But some of you guys like to. I don't have a problem with, like I said, on that APLD. I don't mind taking, a date money, which is a little bit bigger than taco money, right? Like my lowest grade is taco money. Next is burger money. At some point in time, you get to date money. So I don't mind a little bit of date money on that to see if we can make some big bucks, but there's no reason to go too crazy. All right, so thank you, Ryan. So let's do yeah, that's it. So let me look at questions, and then I'm going to do discussion on the algos. I think if you are not interested in the service and you are, or if all your questions are answered, I think do hang up. Don't feel compelled to stick around because the rest is really for subscribers. But I'm happy to have you guys. Again, I will continue to do this publicly once a month, which is I try to shoot for the 3rd Saturday to be consistent. And then again, if you're interested in this, again, no pressure, but do offer free trials, so check it out. All right, let's see. Do you post a link to this webinar? Again, if you're a paid subscriber, you'll get the recording. If you are paid for the rest of ElliottWaveTrader, you will get the recording. If you are not, you will not. So just keeping some value for paid subscribers or ElliottWaveTrader family. So again, even if you're not subscribed to crypto, but you're subscribed to Avi's Market Room, I will post a recording for you. So that's that. Let's see. Does the 764 retrace rule also apply to diagonals for wave 2? There are times in diagonals where they go lower, but again, I maintain that. But we even see something funny in diagonals where the wave 2 actually sometimes in crypto is more shallow than impulses. So it's just, again, it's like, do you want to play with fire? Risk fade. Again, I don't mind sometimes when the risk is tight, putting my stop at the bottom of the 1. But it's, what I'm talking about most of the time is like, a great example is like this has clearly destroyed the 764. And, and then there are people, I know there are people out here that are aping into this. I can just tell by the tape. I mean, they're pushing it up right now, right? So this is a waste of time. There are, if you have a high quality chart like Bitcoin and it's broken a 764 setup by a little bit, it's less of a concern than, on something on a long-term basis breaking for this. That's important qualification. I don't differentiate that on diagonals versus, I don't differentiate that on diagonals versus impulses, just probability-wise. It's just proven to be more fruitful to just keep to that 764. Again, every once in a while, one shirks the rule, But again, I can forgo missing opportunity on 90%, on 2% of them, or 5% of them, or 10% of them, versus saving my bacon on 90% of them, right? I mean, it's just simply math. right? So, you know, I always encourage everyone to stick to that. Any more questions before I go into the algos? All right. Well, for anyone that signed off, you know, thanks for coming, attending. Again, this is you're welcome to listen to this too. That's totally fine. So the question, there's a couple questions on this. So let's talk about what the algos are. So it is a momentum signal on Ether and Bitcoin. It's a little bit different from the old core algo. And the big reason for modification was that I wanted to get a real stop number so you guys can measure your risk better. So right now we've got a stop of, you know, for instance, it shows up in support, so a stop of 1456 on Ether. We took an entry at 1289, so we have a pretty good return. If you need to see the back, remind me if you haven't seen the back testing. I mean, we're in kind of the trial phase, early phase of these. I'm keeping my risk pretty small until we get a little bit of management. But because it's a momentum signal, I mean, it's like GBTC Magic Bus has done very well over the long term, but really struggles in chop. It's the same thing here. I mean, we've had a good signal here, but I would still call us in chop from a long-term basis. I mean, the micro doesn't look like chop, but from a long-term basis, we're really in a range in both Ether and Bitcoin. If you go out like 6 months, 10 months, we're really in a range. So that's typically where the signals aren't going to do well, and we certainly have seen them not start off well, but it's expected to change. The question I had was, what's this? Entry 2, entry 3. It's pretty simple. When I first came out with this, what I told everyone was that I'm giving you an entry and I'm giving you a stop. And again, the stop is if the stop is, you know, breaking of support, or support is resistance too. It still says support. Short side is resistance, but on the long side it is support. And if it breaches that and stays below it at UTC 00, which is for me 4 o'clock Pacific, you can do your own calculation. Then I would stop out and the signal would flip. What I had stated when I came out with this was you can reduce risk in this position, in this algo. It doesn't mean you'll increase gain, just means you'll decrease risk and increase skew if you scale in and out of it. And you know, mainly, so only thing what this is simply a place that's just kind of guides to scale in. I mean, I have grid bots on one of them on Bitcoin, and so I'm ignoring these numbers, but it's just basically a guide. And all I'm doing is taking the highest level price we've seen, and then the current stop, and then giving you the 382 retrace, the 50% retrace, and the 618. That's it. I mean, you can do that on your own, but I'm just giving you these as guides. So again, if you use these algos like a scale in, scale out, so like Friday I took substantial profit, right? I cut my futures trades. In the grid bot, it's just organically going to take some profit as it's going up, and then as it's going down, it's adding back. So if you're scaling in and out, how many trades you want to do is really up to you. Again, the grid bot is like, you know, it's not infinite per se, but it, you know, I think my Bitcoin grid has like 50 places or something. So these are just guides for kind of the re-entry side. Where you scale out, I think you need to judge by your own risk. But again, if you scale in and out of the trade, then you will reduce your risk even over the back tests, which again, I can show you if you haven't seen them. I'll give you a link to that. I'll post it. And then, you know, reducing risk basically just reduces pain, right? Like, I mean, again, I just urge everyone to learn how to trade in a way to fight risk, reduce risk, versus always looking at how much money you can make. Because again, most people that do the opposite basically lose long term. So hopefully that answers that question. Again, just like everything in the service, you got to use stops. And so we have a stop at the support level. If it's short, it's actually a resistance level, but it's not named. Right now we're in long. I mean, the Bitcoin, we went long at 17,443. We're at
101, so that's been pretty good. And then what I want to point out here, so what I did, and this will go further into the scaling out. So what I did was, this is my tracking of the signals, and this is on Bitcoin. And if I delete this, we have oh, that's not right. Whoops. Let me delete this. So from before this last signal, we had a loss, right? $3,000. We had one gain and 3 losses. I mean, that's not a normal in a chopping market. And so this is, again, why you've got to manage your risk. The other thing I'm trying to do is track max drawdown, and I've got that in the back test too, so that you guys can continue to use this. And this is basically in all of these situations. So we had one situation where the max drawdown was different. So if you get a spike below or above resistance or below support, and then it comes back, you'll get a max drawdown that is worse than the return. That just means that it pierced support or resistance and then came back, right? And the actual close of the trade was when it actually, where it was at UTC 000. Okay, so I'm tracking that so that we can continue to manage risk. But so far, again, not great, not stellar performance. I'm not surprised given the choppy market, but expected to change. And then of course, if currently it's basically at a profit. The problem with this is where's our support right now? So our support is let's see, 2101. So, you know, the problem with this is if we were to hit support today, we would lose $800 of that, and then we would be, you know, less profit. If it, you know, if it goes below support and keeps going before getting triggered at UTC 10, then we could potentially have a loss, right? So that's why there's a benefit to taking some profit now, right? Then you actually capture the $4,000 versus at least some of it, right? With a partial position, you capture some of it, and that's why scaling out. So that's where you can actually improve. You can improve max drawdown. You can potentially improve return, although that's not the goal. And you might ultimately improve this as well. Okay, so it's generally advisable to take some profit as we get it, but leave some of the position on just to improve that skill. And I'm kind of rambling and repeating myself, but I hope that's clear. And I have not given you any guidance on when to scale out because I don't have a system, but I'm kind of been doing it intuitively, or again, doing it automatically with the grid bot, which I love the latter, but when I have futures positions, it's a little bit harder. I've done some scaling with the Ether futures because they're tiny, but I've got to save a lot of my margin for like trading the RTY and trading. I do a lot of Forex trading, so I don't have enough capital to completely scale in and out of Bitcoin because of all the other futures I'm trading. But so that's that. And again, these are just guidance. I mean, you can take your own numbers based on your own position, not use these numbers. They're just visuals. So like there's tools. But again, I still advise improving your skew by scaling in and out. And then if we go to Ether real quick, right now we're not in the total game, but we only lost $29 per Ether right now. Of course, again, you didn't take any profit, then you're going to have a bigger loss than that, because we could swing down from here, hit the stop, and then all of a sudden the lifetime return of this has been negative. So entirely possible. That's why, again, taking some profit in Ether is smart. You will again increase the skew of the signal. So that's that. Any questions on that? Any questions coming up on that? I hope that makes sense. Do I need to even, maybe I need to scale this out so you guys can see it, and I'll just zoom this out so you can kind of see where we're at. Questions? Any? All right. Well, if they come up, put them on the board. I'm gonna hang up, get the video up, get the charts up, and I'll be around a while today. I think I'm gonna be working at my desk most of the day actually. So I'll be around, and have a good weekend, guys. Talk to you soon.